guys. Happy Tuesday. Thank you for joining me as always. Thank you to all the viewers for tuning in. Welcome to another episode of Blockchain Banter, Trading Crypto. I think today is our 65th episode. It's wild every time I write that number, how long we've been doing this and how much I've learned from you guys. I am here with Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Welcome, guys. I don't know. I'm eager to hear what you guys, I'm eager to hear what you guys are seeing or, might have to say about what is going on in the market right now, because, we've been talking about it ranging, and this is pretty much the extent of what I'm seeing right now. A little bit up, a little bit down, and that's kind of that's as far as I go. Right.
Well, there's a little drama, there's a little drama happening, but that's kind of typical. We're in this range. I to try and make this more exciting, I was thinking of doing like how the stupid weather people will stand in the middle of the storm, when there's a hurricane to stand in a puddle.
Change your background. It's
right.
This ranging chart
right.
now.
I could give the storm background. We're hunkered down here in Florida, but this actually is this storm is pretty serious. So not a laughing matter. But
you're
yesterday,
in a safe area though, or you'd be evacuated.
Yeah, we're in a pretty good spot here in Miami. Right. It's coming to the west coast of the state and going to be well north of us. So we'll get some outer bands of rain. We'll have rains. We've had rains for a couple of days, and it's going to continue through the week here, it looks like. So, hopefully no tornadoes spinning out of it, and all things should be fine. We're supplied up just in case, because I've been through enough of these things to know that you gotta plan for the unexpected.
Yeah.
And that's about the same thing with crypto, right? With trading, is you need to plan right. for the Holy shit! Do you see how I did that? See, I just put those two things together.
Smooth. It was smooth.
I'm a trained professional. For me, I was watching the weekly close, and yesterday I did an analysis talking about the 21-week moving average versus the 20-week moving average, which I have been, or 21-day, whatever, the 21 moving average, whichever time frame. I've been utilizing that in crypto charts for several years, probably, I don't know, late 2017, early 2018, something like that. And it served me well. Different people have different things that they rely on, and I encourage you to do what works for you, right? But for me, I have confidence in that. And yesterday I did kind of a comparison between those two moving averages, and they're very, very close, obviously. But the reason that I like the 21 in crypto is because, and to clarify, the 20 moving average has been very common in TradFi since the beginning of time, or at least 21 weeks into the beginning of time, right? And so I think the 24/7, 365 nature of the crypto market versus TradFi is part of it, but also the fact that we have more volatility in crypto. I think the 21 smooths things out just a little bit more, and again, it has served me well. So on the weekly close, I was watching to see if we got a close above or below that 21-week moving average, and we closed literally just a hair below the 21-week moving average, and then after the close, Bitcoin climbed above it. So I guess I could show you this on the chart, and that would make more sense instead of looking at each other's beautiful faces here.
I did share in the meantime, Keith. I think I found what you were talking about with your post. You're talking about to your personal account, right? Because I shared that where you're talking about it a little bit in the comments. So somebody can go and refer back to that as well. But still bring up your chart. We want to see what it is that you're referring to. But as another reference point, I shared that from your yesterday post.
Okay, great. Thank you. So on the weekly time frame, you can see that the green line is the 21-week moving average, and we closed just below it, and then moved above it slightly, briefly. You see we have a wick up above that, and we fell back below. And so, here we are below it once again. We've not had enough strength up here. This is now 1, 2, 3. We're on our fourth week where we've wicked past that level, but not printed a full candle body above it to where it's sustainable. Even this one, which looked pretty good, had a wick below, and we saw the breakdown that followed. So we have a couple of levels of technical resistance in this range. The 21-week moving average, which is, let me switch on the metadata here and we can see the 21-week moving average, which right now is hovering around 62.7K. We go to the dailies, we have the 200, the 21-day moving average is also serving as resistance. You can see we just got a rejection off of it today. The 200-day moving average is just above that at about 63.5. And then above that, just shy of 65K, we have the 2021 mid-cycle top. And if we look at fire charts, we can see that we have liquidity that kind of matches that, those technical levels. We were rejected here at the 63.5, and we see ask liquidity laddered up to that 65K level where the 2021 top is. So this is really serving as strong technical resistance. But we also have, parallel to this, we have strong technical support. And you can see that we have bid support down here at 60K, although it has thinned out a little bit here in the past several hours. But these purple whales have been buying through all of this. Now, what I want to show you here on the chart, on the technical side, is where that technical support is sitting, right? So right now we're pinned between technical resistance with these key moving averages and technical support, which is between the red 50 and the blue 100-day moving average. If we look at it on the weekly, and this is really kind of a time where you might want to zoom out, because let's face it, we're going to have this intraday chop and volatility or intra-week volatility. But if you're in this, if you're day trading or swing trading, then you can, and you got fast fingers and good risk management, you can play those trades. But you can see the range is compressing. And until something breaks above or below, then we're going to continue to range here. So if things do break down, I would look first to this 50-week moving average. You see this double bottom here below it. The double bottom shows up better on the day chart. You can see it a little more clearly here. And so what I like about this double bottom, and these yellow arrows here are back from, you remember back in August when we talked about the death crosses. We had all this series of death crosses, and now we're looking at golden crosses, which are just the opposite of death crosses. And you can see that the 21-day has golden crossed, if you will, the red 50, the blue 100, and now they're on pace, or at least coming close to a potential golden cross here soon. We need to see some more upside to get red back on that trajectory up. It's actually leveling off here a bit. But if we could get this to cross, and we can see that the green 21 and the purple 200 are also on a trajectory for a cross relatively soon, those would be bullish indicators, especially coming off of the double bottom. And if you remember back to that analysis we did in back in August, we talked about finding these double bottom support areas after a series of death crosses like we had in August, and we have history of where those had played out. And so I like the structure. I like the fundamental strength of Bitcoin. Yesterday was still another. Wrong chart. Yesterday was still a net positive and a robustly positive day for ETF inflows. dead slack 0 for ETH.
I was just going to ask that. Are we seeing any life here? What was this chart called that we had seen? It was the
what was that?
Oh God, I forget. Remember the chart that I had shared the one day, and it was like the something death to something chart. I don't remember what it was called, but it was the ETH ETF. Was
the heartbeat flat chart, that one?
Yes.
something something like that, right?
The dead heartbeat, right.
Right.
Yeah,
so nothing here yet.
This is as dead as it gets, but I guess no flow is better than outflow.
Right.
Okay.
Right. So for whatever that's worth. And they did have some modest inflows the day before. And even the outflows have been tapering a bit from Grayscale.
I'm
so
not even sure that no flow is better than outflow, by the way. Like it just shows that it's a dead, like it's a product, right? Like the ETF is a product. And the fact that no one's using it suggests that there's no interest in it. Like,
but
obviously you prefer.
But wouldn't no flow suggest holding?
Well, I mean, like in a way.
I view these as a long-term play. I don't trade them. I don't trade these instruments, but I'm under the assumption that most people that are investing in these crypto-related ETFs are in it for a longer game than.
Let me put it another way. For it to be completely dead and observing the these are long-term plays kinds of thing assumes that almost everyone that wanted to own an ETF in ETH did so at roughly the same time, right? So you end up with like a spike at the beginning and then tapering out. Whereas I think a more realistic expectation is that the interest in the ETF would be spread out over many, many people over a very long time period. And the fact that you did get that spike at the beginning and then followed by inactivity suggests that everyone that did want to consume that product already has, which is a disappointing.
Well, we knew that. I think everybody knew that it was going to have much less interest than the Bitcoin ETF, and it really has not done anything other than grind down since inception. So
Ethereum's been a brutal asset to hold on to.
But it is actually holding its relative level for the most part. So like most things in this market, we don't see a lot of activity until things start looking good, right? So maybe if ETH can clear this 2,500 level and sustain it, which means clearing these moving averages. Let's see what the weeklies look like.
Mark, I'm actually curious, looking at that ETH chart, what it would look like running through the simulator from August. That's when that range started.
And what does
would that have been?
Honestly,
does the ETH BTC
we can do that if you like.
Yeah, let's see what that looks like.
Keith, I've got a question while Mark is getting that ready for us.
Mm-hmm.
We were talking about the ranging, and you're saying, until it really breaks out, obviously, like this is kind of what we're expecting to see. We talk about different catalysts.
Well,
right?
breaks out or breaks down.
Excuse me. Yes. So what, are there any specific, is there specific news that you're on the lookout for? Is there, like, we follow different things before it was the rate cuts, right? Is there anything specific that's on your radar that could push the market in either direction at the moment? Like, we know the election, we know that there is global tension, right?
Right. And those are things that aren't going away anytime soon. But I've said for months that I felt like we were likely to stay extended in this range through the election and potentially through the first of the year. Because that's when dare I use the phrase, transition of power is supposed to occur. And depending on the outcome of the election, there could be some, how should I say, civil unrest in the U.S. Can't believe we're even talking about that, but it's actually a reality. And of course, what's happening in the Middle East. I think if Israel targets Iranian oil, that's going to have maybe not a direct impact on U.S. fuel prices, but it's going to have a global impact on energy costs and hence
And
production
remember,
of products, et cetera, et cetera. And if they and God forbid if they target Iran's nuclear program, then this thing's probably escalating to levels
At that point, we're not watching the market.
that nobody wants to see. And even worse, if Iran targets Israel with nukes, God help us all. That's I can't even.
We went there as 55 Move is saying, let's keep hope alive.
I like that. So let's look on the positive
think this is
side.
more towards Ethereum here,
Let's look on the positive side. And to look on the positive side, I should probably get off this ETH chart. But on the positive side, the economic numbers that have been coming out, and we had talked about rate cuts for so long, and the economy for so long, and those things are still valid and are going to bring some volatility on the days that those reports come through. Of course, now more than ever, the talk of the good numbers are skewed. They got to be skewed. They can't be right. Well, maybe they are. Maybe they aren't. Maybe it's happening because we're less than a month away from the election. I'm not disputing whether or not that may potentially be happening, but I do know this: the market seems to react to the data that is presented. So expect that to continue until further notice. So you could speculate about all of these things. I saw a chart somebody posted yesterday in our Telegram group that marked a Middle Eastern black swan event and the level that it was going to. My experience with black swans, and I've seen a couple of them, is that the black swans are not the event that you expect to happen. Black swan, by definition, is pretty much something you didn't see coming. So while all of those events could be catalysts for volatility in whichever direction, if you know what's coming, it's not really a black swan.
When you think about it, though, we consider COVID a black swan, right?
Yeah, we didn't see it coming.
Events leading up to COVID, in hindsight, could we maybe have seen that coming?
Possibly. I mean, it was obviously when it first started to when it first landed on U.S. soil, became something to watch, and then it became a bigger something to watch, and then it became a real concern. So I guess those were the stages, but the
knowing to what extent that was another thing
was what crashed the market. The fact that there was a virus, or the way that it was handled, or any of the above, I don't know.
Shutting everything down pretty much, right? I mean, everything's out of commission at that point.
Right. So it was a lot of uncertainty. And I think, uncertainty.
Maybe that's the thing.
People want to de-risk in periods of uncertainty. We're looking at a second catastrophic storm bearing down on the U.S. and how is that going to be dealt with? That's a big deal. The election is a big deal. We know there's going to be fallout after the election. I mean, it's a given. So and between you and I, and between you and I, Jen, we live in two of the most whacked out states in the country. So, no telling how this all settles, but this is why I look at these technical levels, because whatever we want to speculate about, whether it's geopolitical, whether it's domestic, whether it's economic, the charts don't lie, right? We can look at these levels and know that if ETH can climb back above the, climb back above the this 0.5 fib and get back into the golden pocket, which means it's getting above these moving averages, then we have a chance to grind our way back up and start looking at positive inflows on ETFs and talking about all-time highs. And likewise, if it breaks down, we got to be talking about lows. Same thing goes for Bitcoin. If things break down, then we have those levels to watch. We know what we're looking at, right? If we break down from these moving averages, then chances are we're going to go retest this double bottom support for a potential triple bottom. And if we lose that, then we're going to the trend line. And if we lose that, Mark is going to have a huge fucking party.
He's gonna have a big "I told you so."
Right.
That's gonna be the banner at his party. Is what that's gonna be. He's not even gonna be humble about it either. We both know
characterize me. No. Like I'm not gonna be having a party. I'm gonna be commiserating with everyone else because despite all of my bearishness, I'm almost always have a bullish position on all of these things. But I do think that like I'm not going to get any satisfaction out of it. I just hope that some people made better decisions if it comes around. That's all.
Well, and the same goes for the upside, right? We have to clear all of these level by level. We have to clear these levels before we can get back into an all-time high discussion. And if we're looking for silver linings, it's these potential golden crosses if they play out, and this is our, look how many lower highs we had, right? This was our all-time high. We had lower high, we had lower high, lower high, lower high, and lower lows that went with those. And, so we had this wick down sub 50K, and now we have a higher low. We have our first, if you want to call this a higher high, this is a mini higher high. It's a small victory. It's not taking out a significant high. But you got to start somewhere, right? So what happens next? Do we print higher than this, or do we print lower than this?
Right.
And that's going to be the tell, regardless of what's happening in the world, regardless of who wins the presidential election, regardless of who bombs who. Watch the levels.
Yeah, that's a good thing to kind of sum that up. Right there, I think.
Maybe that's a new marketing slogan. Regardless of who bombs who, watch the levels.
Sad. I know.
Maybe we can get that on eToro or something.
Regardless of who's president, watch the levels. I mean, all the talk of, oh my God, if Trump wins, it's going to be a boom for Bitcoin, and if he doesn't win, it's going to crash. No, whoever wins. There's going to be some short-term volatility. There always is. And then Bitcoin's going to get back to doing what it's been doing for the last decade plus.
Yeah,
exactly.
Mark, do you want to share your screen, or are you still kind of playing around with those simulations? I was going to go comment. Yeah.
Yeah, well, go to a comment first. I'm just setting up.
No, I don't know if XBT just did this, or if this was when we were actually looking at the ETFs. I might have missed it then, but saying maybe worth looking at the sellers as well as the buyers.
Well, those would be outflow days for sure, right? And so
we don't have many of those, do we?
Yeah, I mean ETH doesn't, the ETH ETF doesn't have much of a lifespan to begin with, right?
In my head, I was looking at ETH. I mean, I was thinking ETH automatically. Yeah, we're probably talking about Bitcoin here, though.
Okay, so yeah, well, with XBT, we're definitely talking about Bitcoin. So let's go back to that, and let's go to the Bitcoin ETF.
Mark, I see your screen there too. I'll bring it up once we take a quick look at the
and
sellers.
Get to all of this data. Okay, so here it is since the beginning of time, or at least the beginning of. Let me get this stupid ads off. The beginning of the Bitcoin ETFs, which happened January 11th, and we know that Grayscale just dumped and dumped and dumped and dumped, largely because of their high fee structure. They then came in after the ETH ETF launched. They came in with this BTC Mini, but Grayscale's losses were everybody else's gains, because some of this, first of all, these investors were locked up for years with this grayscale Bitcoin trust, locked up for years. Like since the FTX crash, they couldn't touch it, and so price appreciated quite a bit since then. So perhaps they were cashing out, or perhaps they were escaping the fee structure, the 2.5% fee structure that Grayscale had in place for something much more economical, which everybody else had, right?
Yeah.
And so you can see that it took a while for things to level off initially. The market was not excited about this initially, but then rebounded really, really well. And we had some heavy days flowing in February and March, and then things started to taper off. I think that at the end of, was it the beginning or end of March? Let's see, January, February. I think there was like mid-March, we had where was that huge day?
Right there,
Yeah,
2000.
mid-March, we had a huge day, right? But there's been some attrition, obviously, from some of the other players, where BlackRock has been really steadily grinding, like they're trying to dominate this space. You can see they've had very, very few days of selling. May 1st, I think this was largely a rebalancing event across the board. It came after obviously some degradation in the charts in terms of price, but then May 2nd, kind of a stabilizing day, and then right back to work for the folks at BlackRock. Even Grayscale leveled off after that. We started to see some inflows for Grayscale. And then I think as the asset class matured, he says he missed the cohort selling into the cohort selling into the EF demand. Okay, so he's talking about the large wallets, I believe, that are selling into ETF demand. And the question, we had this discussion in our Telegram group last week, I think, or a few days ago, discussing whether or not some of those may have actually been transferring funds from their wallets into the ETFs to eliminate some of that counterparty risk. Most Bitcoin maxis that I know aren't interested in an ETF for the obvious reasons, right?
Right.
But we did see a lot of money flow that way. So it's questionable whether that is indeed the case, or are those large wallets, meaning the wallets with 100 Bitcoin in them or more, is that the smart money, and are the ETFs the dumb money? Time will tell. Certainly a compelling question to ask, right? But man, BlackRock is going at this so hard. And I don't think that this, I'm not one to go, oh gosh, Larry Fink, I trust that guy. Right? If he says it must be true. But they're certainly putting an enormous amount of weight into this product, and it's obviously performed very, very well. And in terms of, I know this isn't what XBT was talking about, but in terms of selling, again, on days when some of the smaller entities are selling, BlackRock is still buying, which shows you what their commitment is to this. Now, in terms of whether or not this is the smart money, or whether those whales with those huge wallets are smart money, or whether those whales with huge wallets are just some of them may be transitioning into ETF products, or some of them may, because we're looking at, and I wish I had the chart here. Can XBT share a chart with us? Is he able to share a chart with you in the chat, Jen?
Possibly, if it's like a link to his trading view or something of that sort, maybe. but I'm not sure if they're able to actually post a picture.
XBT, if you can send me that chart in Telegram, I can pop it up. The one that we were talking about last week, and we can use that as a reference, because it's interesting, right? So, there's always regardless of what your data point is here, there's always a bit of mystery in what is actually happening, right? If we see large wallets, those biggest whale wallets, selling, are they, or let me rephrase that, decreasing in size or distributing their assets, we don't know for sure whether they're selling, whether they're distributing to other wallets, to smaller wallets, just for security purposes, or whether they are, buying into these ETFs. We don't know that for sure. We just know that
Right.
that we see those largest wallets have been tapering off a bit here recently. So
It's almost kind of like when you were saying, you look at the different classes on the fire charts, right?
right,
But sometimes just because it's a bunch of the smaller classes, like this could be whale activity even still, just doing these in smaller sort of increments, smaller moves in comparison to, how you might have seen them in the past. Well,
yeah,
XBT sends that to you. Maybe I'll bring Mark up really fast, give him a chance
yeah.
to
Let
kind of show
Mark do
what
his
this
thing,
sort
and
of
if
ranging thing is. Real
he just sent it to me. Hang on a second.
okay.
If you want to stay on this topic,
Yeah. Let's stick to this one. We'll take a look at what XBT was saying. And then Mark, I'm going to bring up your simulation.
Sure.
I'm curious too, Mark, because Bitcoin, it's been a minute since we've been talking about these ranging. Did you just run one for ETH, or did you run one for Bitcoin as well?
I did both of those, and I've also got one for Bitcoin
An exotic
versus ETH.
pair? Oh, okay.
I
Nice.
I can do an exotic pair if you like, but I feel like these are the ones that we were discussing.
Yeah.
let's see if I can share this right and share the right thing with you. Let's see.
Also, right after 55 Moose said, let's keep hope alive, he mentioned that his bigger concern than the U.S. election is solar flares. So we forgot to add that into our, doomsday, what we're looking out for. So solar flares, now we're going to have that on the list as well.
It's a legitimate concern. We wipe out the entire blockchain infrastructure.
Okay, so this is the chart that XBT was talking about. Oh, see what I just did? Way to go, Keith. Boom, it's back.
Nice.
So the black line here is Bitcoin price. The orange line is large wallets, actually 10 BTC to 100 BTC in these wallets. And so you can see that they have been distributing actually for quite some time since this whole rally began. Now, Mark and I often say, best time to sell is when price is going up, right? So this could be something like that happening. But you could see there were spikes where they began to accumulate again into those large wallets here more recently, and then distributed, and now we're back to some subtle accumulation here as well. What we don't know, like I said, is whether this is actual buying and selling, or they're just moving coin around.
It looks like a distribution to me.
Very, very well may be. I mean, if you look at the history here, and it's not necessarily perfectly timed, right? If you look at the history here, you see back in 2020, through the 2021 bull market, they distributed all the way, but really, there were periods, like consolidation periods, where they were accumulating here in the consolidation, and then continued to accumulate for quite some time. But look at the point that they started to distribute. This is down here at the 30K range. So they bought between 20 and 30K, and they've been selling ever since.
Right.
That is really a classic distribution picture, but we don't know, like I said, this isn't like we're looking at the order book and we know that we're selling. And
Right.
the difference is, if we do look at the order book and we look over time, we do see that whales have been buying. So, and I'll take out the smaller classes so we can focus on the big ones. There has been some accumulation. Yes, they sell dips. I mean, they sell rips and buy dips. There is some trading going on in there as well, but largely they have been accumulating. So this is a bit of a divergence between what we're seeing here in the order book and order flow versus what
seeing with the ETFs.
what Sean's been showing us. And with that, I'll let Mark show us what he's got. But it's it's an interesting chart and a very compelling story, I think.
Chart.
For sure.
XBT, thank you for sharing that with us, by the way, and allowing us to share it with everyone else as well. Mark, I'm going to bring you up here. Okay, so tell us what we're looking at.
Sure. Okay, so this is the it's been a long time since I've presented one of these. So for those who don't know, the project that I lead, has a DeFi product called Carbon DeFi. And one of the resources that it has available via the app is this thing called the simulator, which was really it's now the web app translation of a toy that I built in Python while designing this product. And the idea is that you can have a look at historical data and then ask like pretty sophisticated questions about what it would have been like to trade that volatility. And so one of the things that Jen asked earlier in this call was, what would it have been like to trade, ETH since August until now? Because it does have this kind of hopping sort of pattern, and you can see very clearly that there's a sort of horizontal band structure developing on it that's relatively easy to to identify.
Mark, if I may, really quickly, I'm asking because we have a tendency, history doesn't always repeat itself, right? But also because we've been talking about how it's been ranging, but we're not only about how it's been ranging, but like Keith had just finished saying, probably through the election, up until the election, through the election, and possibly into, 2025. So it's not only back testing to see what could have been, but what opportunities somebody might still have in front of them if we were to continue ranging and having the same sort of pattern. That's really kind of where my mind was going, not just looking back, but thinking, okay, so here's where I might go. I know we can't forecast this in that sense, but because we are somewhat expecting the market to continue along this path, it could give us an idea of how we might be able to trade this as well. So go ahead. I just wanted to kind of clarify my position there.
Yeah, of course. And you don't, the reason we do, the reason there is a chart here to present at all, because I think that it helps people intuit through, what this product does in a little bit more of a helpful way. But, when I first designed it, I actually told our developers, we don't really need real price data, right? You can just give it random numbers and generate a realistic looking price chart and let people play around with it to sort of see how different trading strategies perform. Like, it's immaterial what data you feed this thing. It's much more important how people, play around with these ranges and decide on what it's going to do. So yeah, you're right in the sense that, like, if we were to consider, if this pattern continues to play out until, let's say, the end of December or something, then this would be essentially the simulation of that. But you can also, if anyone who is listening is interested to get like the source code for this, I can also simulate arbitrary price patterns. So where you can, create your own speculative price chart into the future and then use it as a forwards tester against your expectations. Of course, that requires
Mark,
you to have
quick question, Mark. you using this just to test, or are you actually able to use the platform to execute trades?
Yeah, of course. So this is really to explain how the product does and how it works. But yes, after so let's quickly perform a simulation here, and I'll show you that you can use it to perform these trades. I'm just going to start this with let's see what this one is, ETH. So I'm
The
going to start
red
this with
range that
0
you're
ETH.
showing is your sell range. The green range that you're showing is your buy range. And what this does is everything you acquire in the buy or sell automatically rotates to the opposite, right? So this is creating this
I think it's
cycle.
easier to demonstrate that when we're actually in the simulation.
Okay.
So this is choosing things. So after you choose what you want to do, you get a little animation here that's going to demonstrate what the product does during certain times. So this white line that we have appearing on the screen, this is just looking at the market appetite to trade with a certain token at a specific price. So we're using historical prices of ETH versus USDC here. And you can see that as the price moves towards this green area, which is our bidding liquidity, as that bidding liquidity is taken, you're going to see that the USDC, which is our quote asset, will be converted into the base asset. So if we just move the simulation forwards a little bit in time here, oops, just once, right? And so you can see here the bidding liquidity is being taken, and that's causing this red band to start to fill up with and so the idea here is that as long as you're always bidding low and asking high, the traverse this range, the more profitable.
Mark, we're starting to lose you a little bit.
And so what
Keith, is it just
allowing you
me
to
or is
ask
he cutting
more
out now?
sophisticated questions, which is rather than just
Yeah, he's cutting out for me.
He's cutting out for you also. I have him completely frozen now.
Yes, me too. Screen just
Mark,
changed,
maybe if you, I saw the screen change, but he hasn't changed. Mark, maybe try dropping and then reconnecting. It seems you're having some internet issues.
He is in a war zone, for whatever that's worth.
He's not exactly in like a strong internet connection spot. Okay, so you know what? We'll give it a minute. And hopefully he'll be able to come back up there and talk about it. I can kind of tell a little bit about what.
Yeah, I want to see that simulation, but I also want to see how it would have performed really through this whole extended trend since the all-time high. If when we're in these choppy sideways ranges, those are typically good times to use what most traders consider grid bots, which is basically a range bot.
It's similar. It's very similar.
Right.
Mm-hmm.
What Mark is showing takes it beyond because of the and that's why I asked him about the actual trading with it, because you guys have a way to actually search for liquidity and help people execute those trades, which is cool.
Yeah, so you can create that sort of strategy, right? Define your bids and asks, and then at the end of the simulation, if you're happy with how that performed historically using that historic data, then you can turn that into an actual live strategy straight from the simulation, straight from the price points that you had chosen.
Yeah. So since while we're waiting for him, I'm going to take a peek at the ETH BTC chart, because we haven't looked at that one in a while too, and that's one that he actually likes to show a lot.
And he said that he had run that simulation as well. So it's unfortunate that we don't have him here. Maybe I'll have to.
Well, we'll give him a second.
Get him back on a dedicated.
Give him a few seconds to see if he comes back, but
it's just the slow grind down, also, huh?
It has been a grind down. While that grind has been picking up some momentum here since July, and of course after losing the 21 week moving average, it's really,
that was a sharp.
It's really plummeted. Let's see if my I forget how long ago I drew this, but I've got a target around 0.036. Let's see if we get there.
This is your, oh yeah, okay. Now wait, this is your target, or this is where you're expecting to hit some resistance and this is why it's your target? Explain that to me a little bit.
Well,
I can
this
see
is
where
where
the
this is where I see
previous resistance, right?
potential technical support. It's kind of a prior RS flip zone, meaning resistance support flip zone. You see where it acted as strong resistance, and then it became strong support, and then it, we broke down from there. It acted as resistance again and again and again, resistance again and again, and once we broke it, we had the move up. So I mean, we're pretty close, but if price moves down to this level, if price moves below this level, then it really gets ugly. If this isn't ugly enough, then it only gets worse from here. Let's see what the monthly looks like.
I can also try to pull up the chart that, or like the simulation. At least we could try to run our own if we wanted to, if we don't get marked back here too.
All right. Well,
you could run it.
I'm happy
you
to
could
see
go
that.
to Carbon. You go to app.carbondefi.xyz. You can choose your own ranges and run it too.
All right. Do
We
you
don't have
really
to
want to see?
demonstrate
Do you
it. We
really
could
want to
try
see?
it.
Do you want to see me fumble through that here online, or do you want to show the simulation
There's
of me
no-
fumbling through it online?
No, I mean, as somebody who's never used it, right? This might be a good time to just kind of like, you're curious how this would have played out. If you want to, if you're like really uncomfortable, we won't, but it could just be a fun exercise. I'm somebody who's already very familiar with this, right? I don't know if our viewers are familiar with what Carbon DeFi is or what the simulator is, or if they have as much knowledge on the product as you do.
I'm willing to be your guinea pig.
Okay. I like guinea pigs, by the way. So if any of the viewers want to ever be my guinea pig and run through a simulation with me and give me feedback and tell me what your thoughts are, I mean, I'm all over it. Okay, so you can just exit. App up on the top right.
Yeah, I checked this out a long time ago. Limited access in my location. I understand.
Okay, simulate up on the top left next to Explorer. Fourth tab, up. Okay, so now you can choose your tokens. You've got ETH USDC there. We've got the recurring, which is that buy low, sell high sort of cycle, right? Now you could just drag your ranges and adjust like the actual range themselves.
Okay, so this came in as a preset. My date range.
You can change the dates.
Okay, so let's see what the last 90 days.
And it doesn't have to be from that either. You know what I mean? You can kind of like drag the sorts of dates that you'd like to select.
So if we draw this up to, so this says,
I could see that being halfway decent right there.
This is preset here. So
this is preset. So yeah, I think what it is maybe 10% above, 10% below the current market price. So that white line that you just covered there, current market price.
Right.
So I think the preset comes 10 above, 10 below. I could be mistaken. I think it says it there when you, like before you start moving them around.
Oh, this is cool.
So now, and on the right, do you see where the prices are highlighted there?
Yes.
You don't have to keep that sort of, I mean, I'm going to call it like a depth or a width or something, right? But that sort of range.
Okay, so if I wanted to adjust that range, how do I do that?
On the right, do you see where the numbers are highlighted, the actual prices?
Oh, I can just drag them like this? Oh, nice.
Yeah. So you don't want to buy as low as, what do you have it on right now? 2,000, 2,100, something like that. You can drag that up as well. So you can start buying where you're at and then not as deep as it's showing here. Or the other one up too. I would drag the other one up. No, I mean, it's your experiment.
Okay. And where am I seeing the output of this?
Okay, so now you can enter any sort of amount, right? Just enter a fake budget. It doesn't really matter. You could say $10,000, whatever you want it to be. Okay, so you gained in the last 90 days $300. You're up 3%. If you go back, and you can go back to the simulate strategy right underneath that MOI there.
Right here.
Yep. Do me a favor, drag your red down a little bit. Not the entire range, just the entire range there.
Okay. I'm going to put
Drag
this where I want it. And then I'm going to go.
And drag the green up a little bit, because see how you're buying into the depths of nothing there, right? Unless you think that ETH is going to be going that low and you want to prepare yourself. Now, if you bring that up a little bit too, it might even benefit you because you are going to be getting that second buy in there.
Okay.
And this is just like, obviously it's easier to look back in hindsight and be like, okay, I would have bought here. I would have this, right? But for anybody who's sitting there doing this sort of technical analysis, these are sorts of price points that you're looking at anyway, you know? So now with the change that you just made, now you're up 13% or almost versus that 3.
That's a much better deal. So now what were the dates of that? That was
the last 90 days. It's there too. Yeah.
July 11th. Okay. So what is buy and hold since July 11th?
So this is on top, really fast, Keith. That 13% that you're showing is on top of the hodl.
Okay. Right.
Right. So it's not like if
So I'm recycling my money.
You're recycling your money. So if you held, say you're up 10% from hodling, that 13 that you're showing is on top of that 10.
Well, let's see. I'm in monthlies. Let's go to.
And it's just kind of neat to see, because you can see exactly how much is being bought and sold, at what times. And then you can adjust that accordingly. So if you say, you know what, these are this is that resistance, this is that, what's the word?
Well, my hodl sucks.
Support.
My hodl sucks on that, but I've mitigated half of that, or close to it, a little more than half of that, by printing more ETH, and that's essentially what we've done, right? We printed more ETH through that time period.
Yeah, it'll tell you exactly what your gains would have been if it was in ETH or if it was in USDC at the end of that simulation. It'll show you what your holdings are.
Okay.
So if we go back to simulate, start simulation there. We'll just run that all over again. So it tells you what they are estimated in USDC. And then you see, okay, at the bottom right, see how it's the green? So your holdings right now, you are in USDC. The last move that you made was sold. You can see where it goes up into the red.
And I'm okay with that, because I just made 13% instead of would have been a 21% loss.
Well, and now if the market goes into your buy range, you've already got this buy order pre-funded with that USDC that you got from previously selling.
Okay, let's try this. Let's try.
And just as easily as you can go in and adjust this here in terms of the prices, you can do this on the actual app. Like this is on the app, but when you have a live strategy as well. So you don't have to cancel anything out and withdraw anything and recreate. All you're doing is going in and adjusting the prices the same way that you are now.
Okay, so now I'm way down here for some reason.
You are way down there. Oh, maybe because what do we do? Change it to WBTC. Okay.
Yes.
So you're right now. Yeah, there you go. And I know we're at the top of the hour. If you
all right, okay, let's just look at this one real quick, and then we'll call it. At least we're playing with new toys.
This is true. Well, and it's just neat. You know what I mean? Like, it's a nice way to go back and be like, okay, wow. Like I ran a simulation that surprised the heck out of me, because somebody was saying, well, what about when it goes all the way up, all the way down, and whatever? And I held one where I just traded the middle. and I wound up having done better. Sometimes it surprises you what different sort of market moves. Of course, we always say do what's comfortable for you also,
Right. And so I'm going to run this one. This is same time frame.
Okay. So on top of HODL,
Yeah,
would have been
because what we just
7.83%.
hit my target and sold everything yesterday based on this. So, because we came
So
up here.
you sold first, you bought, sold, bought again, sold again, bought again, sold again. So you completed this cycle, what, 2-3 times? And that was just hands off in the last 3 months. You just automated that. This is just automated.
Right. So that's pretty much setting it and walking away and not dealing with any adjustments. Obviously my targets here, I missed out on some stuff up here. I could obviously, I guess the way to do this is you play with it, you try and optimize your output, and then that's what you execute in a trade.
You also, it's really very easy. The same way you go back and you adjusted your prices. If you're watching the charts and all of a sudden you have an indicator, you know what I mean? Like you get one of your signals on material indicators, right? And it's like, okay, I think that it's going to go up to this point or down to this point. You're just going in and adjusting that price. You're not promised or obligated to this if you want to go in and edit it at all. It's really
so you can edit on the fly without screwing up the strategy.
Absolutely. Yeah, for sure. And that's
cool.
The move that you're making. You're just editing.
That's very cool.
Yeah. Well, thank you for being my guinea pig. I know it wasn't the way that Mark was probably hoping to do this, but it was a fun way, for us to be able to do it and kind of actually talk about it a little bit. I did put the site down there at the bottom. If anybody has any questions, of course, you can always reach out to me.
This is very cool. I remember playing with this a long time ago when we first started doing these, and this is a reminder that I should probably do more.
It's just a neat sort of way, and it does use that real historic data, like Mark had said. I'm also putting material indicators site in here as well for any of our viewers who aren't familiar, who haven't yet checked out either of these things. Definitely recommend both. And of course, giving everybody a follow on X and seeing Keith. I told you earlier, I posted your video, right? Your analysis from a couple days ago. So I always recommend giving you a follow there as well.
Thank you. I appreciate it.
Of course. Hey, stay safe to everybody, in the Southeast. And we talk about global, everybody across the world, just sending good vibes.
Hunker down.
Stay safe. We'll definitely see you next Tuesday. And thank you to all of our viewers. That was some Jersey that came out. Viewers for tuning in. We'll see you next week.
All right. Have a good weekend or week.
Thanks, guys.
What day is it? It's Tuesday. So we got a lot of week ahead of us still, right?
And still early enough for another coffee.
Well, it's a mess. Like, they canceled school tomorrow because of the storm, and now the storm's taking an extra day to get here. So now they're going to cancel Thursday too. It's like I don't know what day it is. All I know is I have.
If your kids don't have school, it always feels like a Saturday or Sunday. It's bound to throw you off.
Right. So it is. It will. Yeah. We're all good though. we're safe. I think we're in a good spot, and we got supplies just in case we're not.
Good. All right. Well, sending good vibes and well wishes and, everything else to you and the whole area.
Thanks.
Of course, we'll see everybody next Tuesday.
Right. And hopefully Mark is safe because he disappeared. This happened 2 weeks in a row. And so hopefully
it's nothing more than an internet connection.
Hopefully everybody in harm's way, all the innocent folks in harm's way, can find shelter and be safe. It's a scary time in the world.
Thanks, Keith. Definitely appreciate it. We'll talk to you soon.
All right. Talk to you later. Have a good one.
See ya. You too. Thanks. Bye.